Well, in the problem number 9, we have to compute two requirements. First requirement, we have to calculate the rate of inflation, and very next requirement, there we will see how to measure the real rate of return considering data given. So in this problem, you can see we have given different nominal rates, which is written as R nominal, and we have different investments. First one is T-bills, which is the meaning of treasury bills. As we know that T-bills or treasury bills is issued by the government, and this instrument provides the risk rate of return. Here we have nominal rate of T-bill, which is 5.5%, that can be written numerically 0.055, and very next investment is long-term bonds, which has 7.5% nominal rate, that is 0.075, and lastly common stock, which has 11.6% as nominal rate or 0.016. Additionally, we have given here consumer price index at the beginning of the period, which can be written as CPIN, and the value is 160. And lastly, we can see that consumer price index at the end of the period, which is CPIN plus 1, the value is 172. Considering this data, we have to compute those two requirements. So first requirement, we can see that rate of inflation, which can be symbolically written as phi, and the formula is CPIN plus 1 minus CPIN divided by CPIN, meaning that the consumer price index at the end of the period subtracting the consumer price index at the beginning of the period by consumer price index at the beginning of the period. This is the actual formula of the rate of inflation. So we can just now input data into the equation. So we have the CPIN plus 1, 172, there you can see, and CPIN we have 160, so we have to input here, and we have to consider the divisor as 160 where CPIN, and if we subtract numerator, we will have 12 by 160, it means 0.075 or 7.5% as the rate of inflation. So this rate of inflation we have to consider to measure the next requirement, real rate of return. We will see now how to compute or how to measure the real rate of return, where real rate of return shortly written as R real, and the formula is 1 plus R nominal, I mean nominal rates, by 1 plus inflation rate. So inflation rate already we have computed, and also we have to subtract 1 for the computation, or it is a part of the formula. Now we can compute or calculate this requirement in a particular table. There you can see that calculation of real rate of return. So first column presents the investment, so T-bills, long-term bonds, and common stock. The respective nominal rates we have just input into the second column, 0.055, 0.075, and finally 0.116. Now in the calculation column, we have to show the formula here and input the data given. So for T-bills, 1 plus 0.055, I mean nominal rate, by 1 plus 0.075, it meaning the rate of inflation, minus 1. So if we compute, then we will get the real rate for the T-bills minus 1.86%. So secondly, long-term bonds, we have that nominal rate 0.075. Here we have to write 1 plus 0.075, and in the denominator 1 plus 0.075, it is the rate of inflation, and minus 1. If we do this or compute using our calculator, we will have 0% of real rate. There is no percentage of any rate for long-term bonds. And finally, for common stock, the nominal rate we have 0.116, and now we just input here into the equation 1 plus 0.116 by 1 plus the inflation rate 0.075 minus 1, and we will have 3.8%. So this percentage are the real rate of the respective investment. So in this way you can compute the real rate of return as well as you can compute the rate of inflation. So hopefully you have come to understand how to solve this problem, and I believe that if you given this kind of problem in the near future in your exam, you will be able to solve.